Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Today, we will be covering March 1st week banking and finance awareness news. Moving to the first news. So the first news is about the framework introduced by SEBI for this specialized investment fund. So we know there is mutual fund that is in existence, that is where the people can invest from anywhere between rupees 100 to 500. So in some mutual fund, the minimum value is 100, in some other it is 500. And there is another set of fund called the portfolio management services, where the minimum value is 50 lakhs. So one set of people can enter this fund, the other set of people can enter this fund. But there are people who have around 10 to 15 lakhs of fund with them, but they do not know where to invest. So since there is no suitable fund for those people, they end up investing in unregulated funds, so which is very risky and which may even not return back the money that was invested by the people. So in order to avoid that, SEBI had bought a fund in between these two, that is the specialized investment funds. So with just a minimum value of 10 lakhs, you can go and invest this fund. So this is for people in between mutual fund and portfolio management services. So now SEBI has introduced the framework for this. Now if you see, the existing mutual funds, they can open this specialized investment fund. For that, they have to meet the eligibility criteria under one of the following routes. So there are 2 routes. So one route is the sound track route, the other route is the alternate route. So they have to meet the eligibility criteria, only then they can open a specialized investment fund. The first is that the mutual fund or the AMC, that is the asset management company, has to be in operation for a minimum of 3 years, and the asset under management that it has managed in the preceding 3 years, that is in the last 3 years, it should not be less than 10,000 crores. Remember, the AMC should be in operation for a minimum period of 3 years, and the asset under management should not be less than 10,000 crores in the immediate preceding 3 years. Next, in the alternate route, it must have a CIO, that is Chief Investment Officer, whose experience is not lesser than 10 years in the management of asset under management, and also it should have he or she should have managed an asset which is not lesser than 5,000 crore. Remember, the CIO should have minimum of 10 years of experience, and the asset under management of the CIO should not be lesser than 5,000 crores. Apart from that, an additional fund manager should also be there with a minimum experience of 3 years and asset under management not lesser than 500 crores. So remember, in the first route, the minimum experience of AMC is minimum operation is 3 years, and the asset under management is 10,000 crores. In case of CIO, it is 10 years and asset under management is 5,000 crores, and an additional fund manager with minimum experience of 3 years and asset under management 500 crores. Remember this data, it is very, very, very important. Next is, since the existing mutual fund itself can open an SIF, but it should ensure that a distinct brand name and a distinct logo should be there. The same brand name and same logo should not be used. A distinct name and logo should be used for this SIF fund. And if you see the asset management company for this SIF, they can also offer these plans, that is systemic investment plan, systemic withdrawal plan, systemic transfer plans. Just like the mutual fund, they can also offer these plans to the investors, but also should ensure that the minimum threshold compliance is met. We know that the minimum investment is 10 lakhs. So this should always be met. Only then this should be offered to the investors. And there are certain restrictions on the investment. So we know that mutual funds, they pull in the money from the people and they invest in various securities, right? Similarly, the same thing SIF is also going to do. But in what all instruments can it invest, or how much weightage it can invest in different types of instrument? That is mentioned in this restriction. So if you see, out of the NAV, not more than 20% of the net asset value should be invested in debt and money market securities issued by a single issuer and rated AAA. Remember, not more than 20% of its NAV should be invested in the debt and money market securities issued by a single issuer and rated AAA. And not more than 60% of the NAV should be invested in securities rated AA. AA is the rating. AAA is also a rating. And not more than 12% of its NAV should be invested in securities rated A and below. Remember, not more than 20% in AAA, debt and money market instruments, not more than 16% in AA, and not more than 12% in A and below A. And also, if you see the limit that has been specified right here, right, it can be exceeded up to a maximum of 5% if there is a board approval. So prior approval of the trustee and the board of the AMC is required if it wants to exceed that 5%. The limit is 20, 60 and 12, but if they want to exceed by 5%, it can be allowed if there is a prior approval from the trustee and the board. And also, not more than 25% of its net asset value should be invested in debt and money market securities of a particular sector. Okay, remember, of a particular sector, debt and money market instruments should not have more than 25% of its NAV, and up to 25% of net assets can be invested in exchange traded derivative instruments. Remember this, traded derivative instrument is allowed in the SIF fund, but only up to a maximum of 25%. So you have to remember all this value. It is very, very important. 20, 16, 12. Next is 25% in case of debt and money market, and here 25% of exchange traded derivatives. And also, they have to provide a pictorial risk meter, just like this. So when you go and try to invest in a mutual fund, you will be able to see this. So this will indicate the risk of the mutual fund, whether it is high risk or very high risk or moderate risk. So that will be depicted in this riskometer. Similarly, even this SIF should have this pictorial risk meter, and that will be called as risk band. And here if you see, there will be 5 types of risk band, where 1 to 5, and 1 being the lowest risk and 5 denoting the highest risk. This is what is the risk band from 1 to level 5. Next, if you see, if the total investment value falls below the threshold, see, the investment value is minimum 10 lakhs. Okay, the investor invests 11 lakhs. But unfortunately, the market goes down. So the value of the NAV or the total investment also goes down to maybe 9.5 lakhs. That is what, in that case, if you see, if at all the investor wants to redeem, then he or she has to redeem the entire money. It is because this has fallen below the threshold. So they cannot redeem it in parts if the investment falls below the threshold, maybe because the market has gone down and the NAV value has gone down. In that case, the investor has to redeem the entire amount. If the total investment value falls below the threshold, that is, in case if there is a decline in NAV, then there is a chance that it can fall below the threshold. In that case, the investor shall only be permitted to redeem the entire remaining investment amount from the SIF. That is, not partly redemption is not allowed. Entire amount should be redeemed. Moving to the next news. The next news is about the All India House Price Index released by the Reserve Bank of India. So, quarterly house price index for the December quarter, that is for the third quarter, has been released by the Reserve Bank of India, and it has noticed that it has increased. This Q3 quarter, it has increased by 3.1%, and it is quite lesser than the Q2 quarter where it observed a 4.3% increase. Now, if you see what is this house price index, this index is constructed based on the information received from the registration authorities in 10 major cities. So, there are registration authority in all the cities, right? But only 10 major city is included in this house price index, and based on that information, this index is conducted. So, you have to remember the 10 major city. It's quite easy to remember. So, it is Ahmedabad, Bangalore, Chennai, New Delhi, Jaipur, Kanpur, Kochi, Kolkata, Lucknow and Mumbai. So, I'll just give you a easy way to remember this. So, you can remember A, B, C. That is Ahmedabad, Bangalore and Chennai. Next, you can remember K, K, K. Kanpur, Kochi and Kolkata. Next, you can remember New Luck. New Luck for New Delhi and Lucknow. And next, you can remember J, Mumbai. So, Jaipur, Mumbai. So, this way you can remember all 10 cities. And one thing that was observed in this house price index is that there was a significant variation in each of the cities. So, compared to last quarter, it has been either grown very high or gone down very low. So, if you see, a significant upward has been observed in Kolkata with 8.1% increase, and the lowest was observed in Kanpur with just 0.1% increase. This is the highest and the next highest variation. Remember, it was Kolkata with 8.1% and Kanpur with 0.1%. The next news is about Japan and India. So, Japan and India, they have renewed the bilateral swap arrangement of $75 billion. So, this bilateral swap agreement had already been in existence. So, now these two countries have renewed this arrangement. So, what is this? So, if you see, because India and Japan has this bilateral arrangement, Indian Central Bank, that is RBI, Reserve Bank of India, they can take 75 billion worth of yen or dollars as loan from the Japanese government. Now, if you see, since it can be in yen, since the money that will be given by the Japan to the Indian Central Bank, it will either be in yen or dollars, whatever the Indian bank asks for. So, there is an exchange rate involved, right? Because a different currency is getting involved. So, the exchange rate will be fixed right now. That is the purpose of this bilateral swap agreement. Remember, they can borrow 75 billion worth of yen or dollars as a loan in future, and the exchange rate will be decided right now itself. This is the purpose of the bilateral swap agreement. Now, this money, if you see, it can be put into various uses, like the Reserve Bank can provide these dollars or yen to the importers to settle their bills, or they can also give it to the borrowers to pay off their foreign loans. So, there will be certain borrowers, right? They would have borrowed loan from abroad. So, they can pay it, external commercial borrowing. You would have heard, right? ECB, external commercial borrowing. So, the borrowers can pay using this dollars or yens, they can repay the foreign loans. Or even the Reserve Bank can hold the fund themselves in order to boost the foreign exchange reserve. So, either of this can be done by the Reserve Bank of India. Remember, 75 billion bilateral swap arrangement between India and Japan. The next is about SEBI. So, SEBI has allowed NBFCs to invest in the security receipts issued by the Asset Reconstruction Company. So, we know that Asset Reconstruction Company, they buy bad loans, that is NPAs, from the banks and then try to recover money from the borrowers. This is the purpose of the Asset Reconstruction Company. So, previously, if you see, only the non-deposit taking NBFC with asset size of 50 crore and above could invest in this security receipts. But now, all NBFCs, including the housing finance company, can now invest in the security receipts. Now, what are these? Security receipts, they are issued by the ARC. So when an ARC acquires a distressed loan, that is an NPA from a bank, it pools the loan into a trust and it issues security receipts to qualified institution buyers. So it acquires, the ARC acquires the bad loans from the banks and issues the security receipts to the qualified institution buyer. Okay. So these security receipts acts as a claim on the recoveries made from the stressed assets. So as ARC recovers the value from the stressed assets, the SRCs are redeemed. So when, if you see, the the security receipts are issued to the qualified institutional buyers. Okay. So when the banks, that is the ARC, when they get back the loan, when they recover the bad loan from the borrowers, that time the security receipts will be redeemed, just like the mutual funds will be redeemed at the maturity time. When the ARCs recover the money from the borrower, that time these security receipts will be redeemed. So these security receipts are issued to the qualified institution buyers. So in this non-deposit taking NBFC is one among the qualified institution buyers. So until now, only non-deposit taking NBFC with asset size of 50 crore and above could invest. But now SEBI has told that the NBFCs, including the housing finance company, can also invest. This is to improve the liquidity so that more money is available in the distressed loans. So ARCs, they can buy the loans, bad loans, and they can easily recover the money. For that, a lot of money is required. For that, people should buy the security receipts. For that reason, this change has been done by the SEBI. The next is about the second advance estimate released by the National Statistics Office. So as per the NSO data, India's real GDP grew at 6.2% for Q3 financial year 24, which is higher than the 5.6% in Q2. So in Q2, we grew at 5.6 and Q3, we grew at 6.2%. And India's GDP will grow at 6.5% for the financial year 25, which is slightly higher than the previous first estimate, that is 6.4%. So in the first estimate, 6.4% was predicted, and now they're telling that we will grow at 6.5%. And this 6.2% is for Q3 financial year 25. The nominal GDP saw the growth rate of 9.9% in the Q3, and if you see, the real gross value added rose at 6.2% in Q3. So this is all Q3 data. Only this one is the financial year 25 data. Remaining and all is Q3 data. And nominal GVA, it grew at 10.2% in Q3 financial year 25. So the National Statistical Office has revised India's real GDP growth for the financial year 24, that is 2023-24. They have revised the real GDP growth from 8.2% to 9.2%, marking the highest growth in 12 years except for 9.7% in financial year 22. So the past 12 years, it is the second time it has showed this highest growth. First time was in 9.7% financial year 22. Now in financial year 24, it is 9.2%. So previously it had estimated 8.2, now it has been revised to 9.2%. And the real GDP for the financial year 23, it has revised upward to 7.6% to 7%. So remember the data, it is very important. Financial year 23, they have revised it to 7.6%. Financial year 24, they have revised it to 9.2%. And financial year 25, it is 6.5%. For the Q3, it is 6.2%. These are very, very important data. Remember it. The next news is about GDP projection. So, as per CRISIL Limited, that is formerly Credit Rating Information Services of India Limited. So, this is a rating agency and this has projected that India will grow at 6.5% for financial year 26. The current financial year is 25. Now, we are in the financial year 25 year. Now, this projection is for financial year 26. Don't get confused. Okay. And the private final consumption expenditure is expected to grow at 7.6% in financial year 25. The main reason for this growth is agriculture production and cooling food inflation. We know that the food inflation has been high and now it is going down a little. So, agriculture production and cooling food inflation will be the main reason for this private final consumption expenditure growth. Now, what is this private final expenditure growth? This is the total amount of money spent by the households and the non-profit institutions on the goods and services. This is what is private final consumption expenditure. That is consumption expenditure done by the people and the non-profit institution. That is the expenditure done by other than government agencies. That is what this private final consumption expenditure means. Now, if you see, there were a lot of tax benefits mentioned in the Union Budget of Financial 25. So this, because of this tax benefit, more money had been allocated to schemes. So since tax benefits have been announced, more money was there and more money has been allocated to the increased allocation for key schemes was observed. And also if you see, this also will help in boosting the consumption. So because of the tax benefit, more money will be accumulated with people. And now people will use it either for saving it or for consumption purpose. So anyhow, it will enter the economy. So this will be beneficial for the economy overall. But two negative things had been observed by this crisis. First is that USA tariff. So United States of America has increased the tariff. If you see, it has placed tariffs in a lot of countries, including India. And also the global trade uncertainty could negatively impact the domestic growth. This is one reason. Second reason is China. Increased imports from China due to trade redirection might also impact the India's net exports. So when people start to import a lot of products from China, then exports from India might get lower, right? So these are the two things that might affect the growth of the economy. So main thing that you have to remember here is financial 26 GDP projection is 6.5% by CRISIL rating. This is the main thing that you have to remember from this news. So next, if you see, as per the World Bank, India must grow at 7.8% annually in order to achieve the high income status by 2047. So this is as per the India Country Economic Memorandum title, Becoming a High Income Economy in a Generation. So as per this title, World Bank has said that India has to grow at 7.8% annually. And now if you see, India is now in the lower middle income status. There are 4 status: low income, lower middle income, high middle income and high income status. We are in this status. From here we have to go to this status and we can achieve it by 2047 if we tend to grow at 7.8% per annum. So growing by, if we go by 7.8% annually for the next 22 years, then we can become a high income nation status by the 2047. So if you see the previous growth rate, it was around 6.3% between 2000 to 2024. So 6.3% is a good growth rate. So since we could achieve this, it is not that it is not very difficult to achieve. So it is high possibility that India can also achieve 7.8 growth per annum, since they have already achieved 6.3% annum between 2000 to 2004. So this is possible for them to achieve in the next 22 years. So what is this gross national income per capita? So if you see, the World Bank will classify the various countries, whether it is a high income or it is a low income or it is a middle income. So in various categories, they will classify the countries. Say on what basis? On the basis of gross national income per capita. On this basis only, they will classify all the countries. So if you see, the gross national income is nothing but GDP plus net income from the abroad. This is what is gross national income. That is GDP plus net income from the abroad is the gross national income. So if you see, low income are the countries whose gross national income per capita is lesser than $1,045, and lower middle income are the countries whose gross national income capital ranges between 1046 to 4095. Remember, low income 1045, then lower middle income 1046 to 4095, then upper middle income is between 4096 12535 and high income is above 12536. So you have to remember these numbers. It is very, very important. Now we are in the lower middle income category. We are aspiring to become high income by 2047. And for that, World Bank is telling that we have to grow at 7.8% per annum for the next 22 years. So for India to achieve the growth of 7.8% per annum, World Bank has suggested few things. First is to increase the investment from 33.5% of GDP to 40% by 2035. Next is to improve the labor force participation rate, that is to bring in more laborers into the economy so that their contribution will be more. When the contribution is more, the protection will be more, and in turn the profit also will be more, and in turn the economy will also grow. So increasing the labor force participation rate from 56.4% to more than 65%. Next is increasing the female labor force participation. So we know that almost 50% of the economy, if you see, half of men and half of women. So female participation is very, very important in order to become a high income country. So increasing the female labor force participation rate from 35.6% to 50% by 2047. These are all a very good data to be included in the descriptive answer. So this will really substantiate an answer, and this will also attract the evaluator. So remember this data. It is very interesting to remember, and it is very important also. Do remember. The next news is about a fintech startup called Rupee 112. So Rupee 112, a Gurugram based fintech startup, it has launched India's fully automated loan dispersal service through WhatsApp. So no person is involved. If you are customer of this bank and you are a salaried person, then you can request the loan via WhatsApp, and it will automatically be dispersed immediately also. Just after verifying your details, the money will be automatically dispersed. So there is no human intervention in this. So if you see, enabling the salaried professionals to access unsecured loans immediately. And if you see the loan amount, it varies from 5,000 to 1 lakh. You just have to message this Rupee 112's official WhatsApp number. They'll verify your details and immediately the money will be transferred if you are an eligible person. The next is HDFC Bank executes first gold trade through IIBX. So this becomes the first domestic bank to trade 5 kg at the Indian International Bullion Exchange, which is located in GIFT City. Remember, India International Bullion Exchange in the GIFT City, it has traded 5 kg, and this was the first domestic bank to trade through the IIBX. So a transaction, it was carried out by the HDFC Bank's International Banking Unit. So there is a banking unit of HDFC in the GIFT City that has carried out the transaction in partnership with Mumbai-based Hindustan Platinum Private Limited. Remember, Hindustan Platinum Private Limited. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3,000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course. The next news is about a co-branded credit card that has been launched by the City Union Bank in partnership with the Chennai Super Kings. So this new co-branded credit card is mainly launched for the cricket fans, especially for the CSK fans. So there will be a yellow color and line logo on their credit cards that is to be issued to the customers. And this will also receive various benefits and exciting rewards for every purchase, and also additional points if the customers purchase CSK goods, match tickets and experiences. And the City Union Bank is headquartered in Kumbakonam. The MD and CEO of City Union Bank is Dr. N. Kamakodi. Next is about an appointment. So, Reserve Bank of India has appointed a new executive director and his name is Dr. Ajit Ratnakumar Joshi. Remember the new executive director name? It is Ajit Ratnakumar Joshi, and he will now be overseeing two departments. First is the Department of Statistics and Information Management. The second department is the Financial Stability Department. Remember the name, it is Dr. Ajit Ratnakar Joshi, and the departments are Department of Statistics and Information Management and Financial Stability Department. So he previously held the position of Principal Advisor in the DSIM, that is Department of Statistics and Information Management, and also served as a faculty member at the Institute for Development and Research in Banking Technology located in Hyderabad. The next news is about SEBI. So SEBI has launched a portal called Bond Central. So this Bond Central portal is developed by Online Bond Platform Providers Association. Remember, it is developed by Online Bond Platform Providers Association in collaboration with various market infrastructure institutions such as National Stock Exchange, Bombay Stock Exchange, NSDL and CDSL. So these were a part for developing this portal. Now this portal, if you see, this is mainly to increase the retailers' investors' participation in the corporate bonds. To make them invest in these bonds, in order to give them exposure to the bonds, this portal has been developed. So this portal, it will provide comprehensive bond listings offering a unified view of corporate bonds from various issuers and exchanges. So this bond will list various corporate bonds that are available in the exchanges, that are issued by the issuers, that is the corporate companies. All these bonds will be listed along with the imported documents such as risk assessment and the bond document will be available in this portal. So the investors can download the document and make particular decision whether to buy the bond or not, and also they can compare the returns with other instruments such as the government bonds, government securities, and then decide themselves whether to buy this corporate bonds or not. So this will help the decision making process easier for the investors. Remember the portal name Bond Central is developed by the Online Bond Platform Providers Association. The next is about a product that has been launched by the Federal Bank. So Federal Bank has launched annuity deposit. So annuity, it is a product which gives you a regular income. Generally, it is bought by customers after retirement, so that during the retirement, when their actual source of income gets cut, this is seen as an alternative source of income. So generally, that is how it is bought. Even if you see the national pension system, here also at the time of retirement, the investors, they have to buy at least 40%. 40% of the money has to be invested into the annuity plans. So here if you see under the Federal Bank, this annuity deposit, it will provide the resident customers a stable income for a period of 5 to 20 years. So there are certain annuities that will provide you a lifetime income. So until you are alive, a regular income will be provided. But there are also annuities that will provide a stable income for a certain period. So this is that kind of annuity where a stable income is provided for 5 to 20 years. And if you see, the minimum deposit that can be made under this annuity plan is 15 lakhs and the maximum is 2 crores. So you can invest anywhere between 15 lakhs to 2 crores in this annuity deposit. And the interest rate offered here is that if it is a 5-year, 10-year annuity deposit, then in case of general public, it is 7.10, and for resident senior citizen, it is 7.60. In case of 5 to 10 years, it is 6.60, and senior citizen 7.10. Similarly, up to 20 years, it is 6.25, and for senior citizen it is 6.4%. Remember, its annuity deposit has been launched by the Federal Bank. Minimum amount is 15 lakhs and the maximum is 2 crores. The next is about an index that has been released by the S&P Global. So S&P Global has released S&P Global Corporate Sustainability Assessment 2024 and the Carbon Disclosure Project. Remember, it is Corporate Sustainability Assessment 2024 and Carbon Disclosure Project. So here if you see Yes Bank, it has obtained third, it has been placed as the India's highest rated bank in sustainability for the third consecutive year. So Yes Bank is the only lender, that is only bank that has been placed in this index, and it has been placed for the third consecutive year. So the score, if you see, it is 72 out of 100, and it is the only Indian lender featured on this S&P Global Sustainability Yearbook. So it has also retained a A rating from the CDP, that is Carbon Disclosure Project. The things that you have to remember here is that the only lender that has been listed in this yearbook is Yes Bank, and the score is 72 and the rating is A rating. Next is this CSA, it evaluates around 1000 ESG indicators, that is environmental, social governance indicators such as climate strategy, financial inclusion, human capital development, corporate governance. So these are the various indicators that are being evaluated by the CSA, and in the yearbook, sustainability yearbook, around 7,690 companies were evaluated. From that 7,690 companies, 780 companies are being now included in the yearbook, and from this 780 companies, 51 companies are from India. Remember, out of 7,690 assessment, 780 companies are now listed in that yearbook, and out of that 780, 51 companies are from India. So in case of CDP assessment, if you see, 22,000 organizations have been assessed, and Yes Bank, if you see, the leadership level is 11 out of 17 key ESG parameters. This Yes Bank leadership level is 11 out of 17 key ESG parameters, that is environmental, social governance. The main thing that you have to remember here is Yes Bank is the only Indian lender placed under this Global Sustainability Yearbook, and the score is 72 out of 100, and it has retained a rating of A. These are the main things that you have to remember. The next news is about SEBI. So we know that Madhabi Buri Bush, she was the first woman chairman of SEBI. Now her term has come to an end. So now if you see, the new chairman of SEBI is Tuhin Kanta Pandey. So remember the new chairman of SEBI, he is Tuhin Kanta Pandey. So if you see, he was the longest serving secretary of the Department of Investment and Public Asset Management, that is called as DIPAM. So if you see, Department of Investment and Public Asset Management, this is under the Ministry of Finance. So this department works under the Ministry of Finance, and Tuhin Kanta Pandey was the longest serving secretary. Now he will be the new chairman of SEBI from 1st March 2025. India has extended around $1 million to the government of Laos People's Democratic Republic, that is Lao PDR. So to this country, India has provided or granted a loan of $1 million. So this, if you see, Laos, it is located in this location, that is it is a neighbor of Vietnam, Thailand and China. This money will be used for a project called as Strengthening Large-Scale Food Fortification, the case of investing in rice fortification. So this is where the money provided by the government of India will be put into use. So the project will be implemented by the Rome-based World Food Programme Organization. So this project aims to strengthen the food system, address the long-term nutrition-specific strategies, promote food fortification programs, increase the nutritional diversity and overcome micronutrient deficiency in the Lao country. So this is the objective of the project. And also, if you see, the government of India has overall given $150 million to around 85 projects across the 65 countries. Next is about the penalty imposed by the Reserve Bank of India. So let us look into the penalty. Bombay Mercantile Cooperative Bank has been penalized of amount 33 lakhs. Remember, Bombay Mercantile Cooperative Bank Limited. Next is Nashik based Business Cooperative Bank Limited has been penalized of 1 lakh, and Nashik based Lasil Gaon Merchant Cooperative Bank has also been penalized of 1 lakh. Remember the bank name and the penalty amount imposed by the Reserve Bank of India. Next is about a pilot program that has been launched by the Bank of Baroda. So the Bank of Baroda has launched a pilot version of the merchant loyalty or cashback program. The objective of the program is to boost the CBDC, that is central bank digital currency. In order to boost this digital rupee, this program has been launched. So this program, if you see, the customers, they can use digital rupee to make purchases, and if they use digital rupee to make purchases, then they will be given a cashback offer, and this cashback offer will also be in the form of CBDC. Okay, so the cashback that has been given to you will be stored in your CBDC wallet, and again you can use that CBDC money to buy or to redeem from the same merchant only. Remember, when you make a transaction using the digital rupee with a merchant who is a customer of Bank of Baroda, you can get the cashback in CBDC format only, and that can be redeemed at the same merchant only. Okay, and currently this is only applicable to the Bank of Baroda members. So the merchants registered on the Bank of Baroda app, they can set up this cashback office without any further infrastructure cost. The main objective is to improve the CBDC in the country.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact on directly on this number. Thank you.